What's up, everybody? The gold and silver market is acting a little strange today, at least in my opinion, and we are going to discuss that on this video today. Please consider hitting that thumbs up button on the video and definitely let me know your thoughts, your opinions in that comment section below. But today, I've been following this story because Jerome Powell spoke, and usually whenever Jerome Powell speaks, especially what he said today, we would think that the gold and silver markets would be acting the opposite of what they are currently doing. But gold and silver is currently up. As I am recording this video, silver is up a little bit, up 0.32% or up 8 cents to $25.44. Gold is up a little bit over 1%, up 1.17% or up $23.90 to $2,060.60. While most are awaiting the Federal Reserve Chairman Jerome Powell's next move when the FOMC meets for their two-day meeting starting December the 12th, 2023 and concluding December the 13th, 2023. On that day, Jerome Powell will walk up to that podium on December the 13th and announce what their plans will be for the federal funds interest rates. Will he raise rates one last time in 2023, or like he has done the last several times, and that is keep rates unchanged? While we are awaiting that meeting and announcement on December the 13th, 2023, Jerome Powell did speak today, but what he said, the markets decided to ignore everything he said today, because you would think that the markets, the gold and silver markets, would be down today, but instead they are spitting in the face of Jerome Powell and they are currently up. I will be referencing an article from CNBC and Jeff Cox. It says Federal Reserve Chairman Jerome Powell on Friday pushed back on markets' expectations for aggressive interest rate cuts ahead. I'm going to pause reading this article just for a moment, and I believe, in my opinion, the reason why the dollar is currently down, it's weaker today, and gold and silver is up, despite what Jerome Powell is saying, is because I think the markets believe and the experts believe that interest rate increases are over and the cuts will begin late in the first quarter of 2024 or the beginning of the second quarter of 2024, and that the rate increases are over. I believe that's what the markets believe, and that's why the dollar is weaker today and gold and silver is up against the United States dollar. But let me know what your thoughts are in the comment section below. Do you think interest rate increases are over, or do you think he will increase interest rates one more time before the actual pivot, before he decides to cut rates? Let me know what you think in that comment section below. Back to the CNBC article. It says Federal Reserve Chairman Jerome Powell on Friday pushed back on markets' expectations for aggressive interest rate cuts ahead. It would be premature to conclude with confidence that we have achieved a significantly restrictive stance, or to speculate on when policy might ease, Powell said in a speech. However, the remarks gave some credence to the idea that the Fed at least is done hiking, as the string of rate hikes since March 2022 have cut into economic activity. Powell noted that inflation is moving in the right direction. Markets largely took Powell's comments as dovish, with stocks up and Treasury yields sharply down. Federal Reserve Chairman Jerome Powell on Friday pushed back on markets' expectations for aggressive interest rate cuts ahead, calling it too early to declare victory over inflation. Despite a string of positive indicators recently regarding prices, the central bank leader said the Federal Open Market Committee plans on keeping policy restrictive until policymakers are convinced that inflation is heading solidly back to their 2% goal. It would be premature to conclude with confidence that we have achieved a significantly restrictive stance or to speculate on when policy might ease, Powell said in a prepared remarks for an audience at Spelman College in Atlanta. We are prepared to tighten policy further if it becomes appropriate to do so. That is what Jerome Powell said. Then this article says, however, he also noted that policy is well into restrictive territory and noted that balance of risk between doing too much or too little on inflation are close to balanced now. Markets moved higher following Powell's remarks, with major averages positive on Wall Street and Treasury yields sharply lower. Markets view today's comments as inching towards the dovish camp, said Jeffrey Roach, chief economist at LPL Financial. Expectations that the Fed is done raising rates and will move to an easing posture in 2024 have helped underpin a strong Wall Street rally that has sent the Dow Jones Industrial Average up more than 8% over the past month to a new 2023 high. Powell's remarks gave some credence to the idea that the Fed is at least done hiking, as the string of rate hikes since March 2022 have cut into economic activity. They are quoting Jerome Powell as saying, having come so far so quickly, the FOMC is moving forward carefully as the risk of under and over tightening are becoming more balanced, he said. As the demand and supply related effects of the pandemic continue to unwind, uncertainty about the outlook for the economy is unusually elevated, he added. Like most forecasters, my colleagues and I anticipate that growth in spending and output will slow over the next year as the effects of the pandemic and the reopening fade, and as restrictive monetary policy weighs on aggregate demand. A Commerce Department report Thursday showed that personal consumption expenditures prices, the Fed's preferred inflation gauge, were up 3% from a year ago, but 3.5% at a core basis that includes volatile food and energy prices. Recent sharp declines in energy have been responsible for such of the easing in inflation. Powell said current levels are still well above the central bank's goal, noting that core inflation has run at a 2.5% annual rate over the past 6 months, Powell said. While the lower inflation readings of the past few months are welcome, the progress must continue if we are to reach our 2% objective. Inflation is still running well above target, but is moving in the right direction, he said. So we think the right thing to be doing now is to be moving carefully, thinking carefully about how things are going on, letting the data tell us what the story is. The data will tell us whether we've done enough or whether we need to do more. After inflation hit its highest level since the early 1980s, the Fed has enacted a series of 11 interest rate hikes, taking its policy rate to the highest in 22 years at a target range between 5.25% and 5.5%. The FOMC at its past two meetings kept rate levels unchanged, and multiple officials have indicated they think the federal funds rate is probably at or near where it needs to be. The next Fed meeting is December 12th and 13th. The strong actions we have taken have moved our policy rate well into restrictive territory, meaning that tight monetary policy is putting downward pressure on economic activity and inflation, Powell said. Monetary policy is thought to affect economic conditions with a lag, and the full effects of our tightening have likely yet to be felt. Then the article goes on to say traders are expecting cuts. Now, I was talking about this a little earlier in this video before even referencing this article, and why I believe gold and silver is up today despite Jerome Powell saying that the interest rate increases may or may not be over, and not to speculate or expect 100% that the rate cuts will begin early in 2024. But it does say traders expect cuts. Market pricing Friday morning indicated that the Fed indeed is done hiking and could start cutting as soon as March 2024. According to CME Group, moreover, futures are pointing to cuts totaling 1.25 percentage point by the end of the year, the equivalent of 5/4 percentage point reductions. However, neither Powell nor any of his fellow officials have provided any indication that they're thinking about cuts, with the chair adhering to data dependence for future decisions rather than any preset course. We're making decisions meeting by meeting. Now, they are quoting Jerome Powell, and I have heard him say this over and over and over again, saying that they are taking this meeting by meeting, not giving you any indication of what they are going to do ahead of time. And what does that do, in my opinion? It leaves uncertainty in the markets. And what do markets hate more than almost anything else? And that is uncertainty in the markets. But it says we are making decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as balance of risk, Powell said. Addressing the economic data, Powell characterized the labor market as very strong, though he said a reduced pace of job creation is helping bring supply and demand back online. I do want to reference a little piece of a Kitco News article that was published today on December the 1st, 2023 by Niels Christensen. A lot of what's in this article was also in that CNBC article that I referenced prior to this, but I do want to focus in on just a little piece of this as well. The headline is Gold Prices Ignore Powell's hawkish stance as prices surge to session highs above $2,050. Per Kitco News, the gold market is trading at session highs, breaking through resistance at $2,050 an ounce, even as Federal Reserve Chairman Jerome Powell maintains his hawkish stance on U.S. monetary policy. Although inflation has fallen sharply from last year's 40-year highs, Powell said the central bank still has some work to bring inflation down to its 2% target. Wednesday, the core personal consumption expenditure price index, the Federal Reserve preferred inflation gauge, said that in the past 12 months to October, inflation rose 3.5%. And then I'm going to skip over a lot of what this article is talking about because it just echoes what the CNBC article already said that I referenced in this video. But it does go on to say Powell's comments have not spooked the gold market as it trades near session highs, with prices solidly above initial resistance of $2,050 $50 an ounce. February gold last traded at $2,077.90 an ounce, up 1% on the day. Some analysts have said that gold could be overstretched as a March rate hike could be overly optimistic. Many economists expect that the economy will only be soft enough for a rate hike at the end of the second quarter. Some market analysts have said that although the Federal Reserve may not be ready to cut interest rates anytime soon, but it is clear that they are not going to raise as the economy starts to slow. In a recent interview with Kitco News, Axel Merck, president and chief investment officer of Merck Investments, said that this perception is providing the support for gold's current rally. So let me know what your thoughts are in the comment section below. When Jerome Powell steps up to that podium on December the 13th, 2023, do you think he will raise interest rates for the 12th time, or do you think he will leave rates unchanged as he has done the last several times? According to BLS.gov, the U.S. Bureau of Labor Statistics website, the next CPI, Consumer Price Index, is scheduled to be announced when? The exact day that the FOMC is starting their two-day meeting on December the 12th, 2023, and that is the day before Powell is expected to make the announcement of his plans for the next move of the federal funds interest rate, if he's going to keep rates unchanged or if he's going to decide to raise interest rates yet again. Before ending this video, let's look at silver and gold spot prices one more time. Silver is currently up a little over 0.5% or 15 cents to $25.51. Gold is up a little more than 1 3/4%, up 1.79%, or up $36.40 to $2,073.10. Finally, according to the CME Group FedWatch tool, and if you don't have a link to this, I'll put a link to this in the description of this video, and this may or may not be 100% accurate, but I have been seeing that this is pretty much accurate. They have been pretty much spot on. It may be more accurate as we get closer, maybe the day before Jerome Powell makes that announcement on December the 13th, but according to the CME Group FedWatch tool, there's a 97.7% chance that the rates will remain where they are at, and that is the federal funds target range of 5.25% to 5.5%, and that leaves just 2.3% chance that rates will be increased by 25 basis points. What will Jerome Powell do? Well, I guess we'll just have to wait and see, one, what the CPI data shows on December the 12th, 2023, and then finally what Jerome Powell decides what he is going to do on December the 13th, but not just what he's going to do is going to probably affect the markets one way or the other, but also what he says, not just the decision of raising rates or leaving rates unchanged, but what he says following that announcement with what he thinks they're going to do going forward. Let me know your thoughts, your opinions in the comment section below. What do you think will happen with interest rate increases on December the 13th? I appreciate everybody for taking time out of your day to watch this video. Like, comment, subscribe, share. Definitely give me your thoughts, your opinions in that comment section below, and I'll talk to everybody on my next video. Thanks a lot, everyone.